What is up, everyone? And welcome back to Crypto in 60, your daily crypto bite. I am so glad you are here today because honestly, the market is waking up and there is a lot to unpack. Bitcoin is pushing back towards $76,000, and traders are watching two very big macro events that could send it even higher. Morgan Stanley's brand new spot Bitcoin ETF just hit $139 million in assets in only 9 days, which is honestly jaw-dropping institutional momentum. Solana is holding incredibly steady near $85, with over $3 billion in daily trading volume, proving it is not going anywhere. Over in Europe, 39 of the biggest financial names on the planet, including Nasdaq, are demanding the EU fast-track its blockchain rules or risk losing the entire tokenization race to America. And in Japan, two of the country's biggest financial institutions just launched a proof of concept to put government bond collateral directly on a blockchain. There is a ton of ground to cover today, so let's jump straight into it. All right, so let's start with the big one. Bitcoin is climbing again today, pushing back up towards $76,000. And the two catalysts traders are watching are really interesting. First, there are active US and Iran talks happening right now, and any sign of de-escalation on that front tends to reduce the risk premium that has been weighing on markets across the board. Second, and this one matters a lot for crypto, there is a Federal Reserve leadership hearing with Kevin Warsh in focus. Warsh is seen as someone who might favor looser monetary policy, and looser policy historically means more liquidity flowing into risk assets like Bitcoin. Think about this for a second. Bitcoin is trading well above its recent lows, momentum is building, and the macro winds are starting to shift. Is this the beginning of the next leg up? The data is certainly pointing that direction. And while Bitcoin is doing all of this, one Wall Street giant just made a very loud statement about where they think this market is headed. Now here is the crazy part. Morgan Stanley launched a spot Bitcoin ETF, and in just 9 days, it has already accumulated $139 million in assets. 9 days. That is not retail investors clicking buy on their phones. That is institutions, that is wealth managers and high net worth clients who have been sitting on the sidelines waiting for a regulated, trusted vehicle to get exposure to Bitcoin. And now that vehicle exists with the Morgan Stanley name on it. This is exactly the kind of slow but powerful institutional adoption that changes the trajectory of an asset class. When the biggest names on Wall Street start building Bitcoin products and those products fill up this fast, it tells you the demand is real and it is not going away. The narrative has shifted from crypto being a fringe experiment to it being a legitimate asset allocation. So what does this mean for you? It means the smart money is already moving. The question is whether you are moving with it. But Bitcoin is not the only asset showing serious strength today. Look, Solana is doing something that does not get talked about enough, and that is holding its ground with conviction. Right now, SOL is trading near $85, and it is registering over $3.2 billion in daily trading volume. That is not a coin that is gasping for air. That is a network that is actively being used. The price is sitting in a tight zone between $80 of support and $86 of resistance. And when you see that kind of compression with that kind of volume underneath it, historically, it tends to resolve to the upside. The interesting thing about Solana is that its fundamentals, the transaction throughput, the developer activity, the ecosystem depth, are all holding up, even as the broader market has been navigating uncertainty. Now, here's the thing. When Bitcoin starts moving with authority toward new highs, Assets like Solana with this kind of volume profile tend to follow aggressively. Keep your eye on that $86 resistance level. A clean break above it with this volume backing it up could be very significant. Now let's zoom out and look at what's happening on a global policy level. This one is huge, and it is not getting nearly enough attention. A coalition of 39 major financial firms, and we are talking names like Nasdaq here, have written a letter to the European Union demanding that they fast-track the DLT pilot regime for blockchain-based finance. Their warning is blunt. Either move faster on these rules, or Europe will fall behind the United States in the global race for tokenized finance. Now, why does this matter for your portfolio? Because when 39 of the biggest names in traditional finance start lobbying governments to build better infrastructure for blockchain, they are not doing it for charity. They are doing it because they see real money to be made in tokenized assets, and they want the regulatory green light to go build those markets. This is the mainstream financial world essentially saying crypto infrastructure is no longer optional, it is competitive necessity. Europe, moving on this, could unlock a wave of institutional capital across multiple blockchain ecosystems. It is the kind of foundational news that does not pump a coin today, but absolutely shapes where this market is in the next 12 to 24 months. And speaking of foundational moves, Japan just did something quietly remarkable. Japan Securities Clearing Corporation, Mizuho Financial Group, and Nomura Holdings have just launched a proof-of-concept trial to manage Japanese government bond collateral directly on the Canton Network blockchain. Let that sink in for a second. Japanese government bonds, one of the most traditional, conservative, legacy financial instruments in the world, being managed on a blockchain. This is not a startup doing something experimental. This is the Japanese financial establishment testing blockchain infrastructure for real-world sovereign debt collateral management. If this proof of concept succeeds and moves toward full deployment, we are talking about an enormous amount of collateral value being processed on-chain. This signals a broader global trend where traditional finance is not fighting blockchain anymore. It is integrating with it. Japan moving in this direction, alongside Europe's regulatory push and Wall Street's ETF activity, paints a very clear picture. The institutions are here, the governments are here, and the infrastructure is being built right now. For crypto holders who have been patient through the uncertainty of the last few months, this is the kind of news that should genuinely excite you about what is coming next. And that is your daily crypto bite for today. 5 massive stories showing you that this market is not slowing down. Bitcoin pushing towards $76,000. Morgan Stanley's ETF collecting $139 million in 9 days. Solana holding strong with $3 billion plus in daily volume. 39 financial giants pressuring Europe to catch up on blockchain, and Japan putting government bonds on chain. The signals are everywhere. As always, this is not financial advice. Always do your own research and never invest more than you can afford to lose. If you found this valuable today, please hit that subscribe button on Crypto in 60 so you never miss your daily crypto bite. We will see you in the next one.